Good morning. Welcome to the XM.com weekly market update, and we're joined again by Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Welcome back.
Thank you.
Plenty of data, so once again we'll start domestically. We had the wage price numbers last week. Around that sort of 3.2%, those wage numbers are actually pretty good on a historical basis. Obviously not keeping up with inflation, which you probably don't want, but reasonably, I think the RBA would be reasonably happy with that wage price growth at the moment.
Well, I suppose they would be, but if you want to buy a dozen eggs, it makes it tough. And the whole shopping complex, and you're getting people that just you've got to change their diet habits quite simply because of inflation in Sydney. So that's going to be felt very much across all of Australia. And yeah, you certainly need a wage rise to match what it's costing you to run your family.
Yeah, certainly do. Similarly, in New Zealand, CPI numbers, there's like a lot of economies, they're coming off slightly, but their wages are going up as well. But that chart clearly shows the gap between wages and inflation.
Yeah, it tells the story, and you don't need to be a Rhodes Scholar to figure that one out.
No. Retail sales in New Zealand as well, which is not surprisingly came down last quarter quite a bit actually. So, and the central bank in New Zealand, they've been quite aggressive with interest rates compared to the other central banks. So there's no surprise there with that figure.
No, far from it, and it'll be interesting to see whether they put their foot on the brake or whether they're going to continue with the uptick as far as interest rates and their policy moving forward. NZ.
Yeah, because they haven't been shy with the increases.
First cab off the rank.
Now, Canada, CPI numbers. So this goes back over 2 years. So there's obviously a downtrend there, but it's still the last CPI numbers that just came out at 5.9%, drifting off, but it seems to be like a few of the other countries sticky around those levels.
Yeah, very much so. So, there is a large amount of reprieve because of the energy prices, and they've collapsed compared to where they were in that period, April to July, October. They've come under pressure to the downside, but we'll just have to wait and see what goes on over the next matter of month or two as far as whether we see an uptick with energy prices, and that could really force those numbers back up. Let's hope it doesn't happen.
Yeah. And once again, retail sales, it's always a good barometer to see what the consumers are doing. So up slightly. So we're sort of seeing that across the board where these retail numbers are fluctuating a bit, but they're sort of hanging in there.
Yeah, they are. There's no doubting that. So again, moving forward, you really, it tells the story. It's very patchy, but you've just got to see how it all impacts later this year with higher rates and how that all moves from a locked interest rate environment for homeowners. Now they're coming to a floating rate, and that could really impact retail sales.
Yeah, well, that's particularly in Australia and probably Sydney and Melbourne more so.
Yeah.
That fixed rate, there's a lot of talk about that at the moment, the fixed rate mortgages rolling off.
Yes.
And how people will then feel the pinch.
Well, then comes the next part as far as serviceability, and what we're hearing is people, they were allowed to borrow $1 million, for instance, in November. Now the banks are coming back, and it's a 3-month window. If you don't buy a property, and then they revise it, some people are down 20, 25%, 30% from that headline. So if it was $1 million, now you can borrow $850 or $700. It just depends, and that's going to certainly impact from a housing standpoint.
Yeah, it's certainly, and it just flows through to a lot of other industries, like to all your like the white goods manufacturers and everything you kit out your house with.
Absolutely.
And that's where the economy, even though it's holding up fairly well, we've got the GDP numbers later this week for Australia, and it's going to be a positive number again.
Yeah, and I think we've got CPI numbers coming out. I saw, so we're at the end of the month, 28th today, unless you were a leap year baby, and it'll be tomorrow, but that's not the case. I've got a daughter that is.
Yeah.
But 1st of March tomorrow.
Yeah. The 10-year Treasuries now hovering around just above 3.9, so they're up about 40 basis points in the last month, which is quite a rise.
Yeah.
And we see the correlation there to the 30-year mortgage, which is fairly obvious because they track each other very closely.
Very closely, yes. And the herd on Main Street there from a 7% headline, and is that going further? They're saying now it could be a 5.35 as far as where Fed Chair Powell sees things as with rates by July. So is that, or are they going to adjust that moving forward and come out with a new headline come April or May?
Yeah. Mortgage applications in the US have dropped significantly, so which is just once again, the main sector that are really feeling those interest rate rises at the moment are the housing sector.
Yes.
And you're seeing it right across the board. Obviously, we've got the mortgage applications have dropped significantly. Housing prices are now dropping as well. And as you say, it's all about that serviceability.
Yeah, San Francisco, I noticed that they've, cratered as far as price. So, it'll be felt across Main Street, USA. And they're a big base when you think about how many people move, and it gets to a point, it's too expensive to move. You've just got to burrow down and pay your mortgage and cut your spending.
Yeah, and it's certainly, I know from an Australian perspective, it's one thing that the consumer is they'll hang on to that house.
Oh yes,
for as long as they can. They just don't want to give that up. So
no,
and they'll certainly scrimp and save in a lot of other areas to do so.
Yeah, for sure.
Finally, the PCE numbers came out last week in the US. They crept a little bit higher, which is not a good lead into the next inflation number in a couple of weeks. So, and this is a really important number that the Fed looks at.
Yeah, they're looking at about 4.1 as a estimate, and they came in 0.6 higher at 4.7. Joe on CNBC said, Joe Kernan said it's as bad as it was in the 80s. So he was discussing that with Rick Santelli. I saw the clip, and that when it dropped on Friday.
Well, you would only think, assuming the next inflation figure is flat or maybe slightly higher, yet to be seen, of course, but it just feeds into the higher interest rates in the US still.
Yep, exactly. So it's something we're just got to wait and see. US dollar index, what happens there? It's given back a bit of territory over the last, say, 12 to 15 hours. And it was at 105.50 sort of number. Now it's at 104.65. So we've seen a fair bit of movement across currencies in that window.
Yeah. Certainly there's a little bit of pain out there now. And interesting, late last week, some of the big box retailers in the US had their earnings. Home Depot, Walmart, which are enormous companies and they make plenty of money. But they're now sort of signalling tougher times ahead.
People are tight in the belt.
Certainly are. So it could be the story for the next sort of 3 to 6 months at least.
Yeah, well, it'll be interesting to see the next earnings season and how that's all reported, and that really tells you a story with the S&P and certainly the Dow, and of course from the tech sector standpoint, we've seen big layoffs there across their whole sector. So whether you're going to see normally the way they teach you over there at those little business schools at UTS, when you go and do an MBA, where you've got to cut costs if you're not hitting sales. So what was it? Jack Welch used to say he'd hold these management teams' feet to the fire at 2 a.m. and you just got to hit those sales. And if they don't hit the sales, then naturally you got to look at headcount. So let's hope it doesn't get to that. But it's 23 is going to be a fascinating year.
Yeah, it certainly is. Anyway, we'll keep an eye on things. Thanks for joining us.
Good to see you.
We'll catch up again next week.
Look forward to it. See you next.
Excellent. Thanks, Pete. And that's the xm.com weekly market update.